Good morning, everyone. Good morning. Good morning. Yes, we are live. We have our bell that goes live every day.
Yep.
Perfect. We should adjust that by a minute, maybe.
Right.
No, it's a good tradition. I think I like it. Welcome everyone to the show, Micro Moment Trading Investment Show. We have a full house today. Expert traders. I'm going to take an extra second for everyone to introduce themselves. We haven't done that in a couple weeks, and if there's any new watchers, we want to say hi to you. So friendly reminder, we have two comment boxes, one on Facebook if you guys are watching, and then YouTube, we have one for you as well. Any questions you have for us, you can drop directly there, and then we'll be able to bring them up on our screen. So I'm sure everyone's still coming in here on the live, but we'll get started. So if you guys would be willing to give me a brief introduction of the type of thing you trade and your name, and then if you help with a micro moment technique. So Joe, if you'd like to go first.
Okay. Well, thank you, Micah.
Yeah, of course.
Welcome everybody. To our podcast here. And what I do is sort of MC the micro moment trading sessions every morning from 8:30 Central Time to 9:30, the first session Central Time. And then a lot of times the guys will come back later on. Sean will hang around after the first session. He usually just hangs around and answers any questions that we don't get to during the first session. And of course, I've been doing this for a long time and teaching the covered calls and all the various techniques off that. So, and I think I'm the oldest one here. I think I'm older than Randy.
Yes, way older.
Yeah, he's in full support. Oh, I don't know, Randy. I think you're still plenty young.
Yeah.
How's it going for you, Randy? Or Joe? First of all, how was the micro moment week?
The micro today, Micah, was great. We were up 24.983% for the day, and for the week, about 110%. And we've averaged 99% for the last 99 weeks. We have our 100th week starting on Monday. And that's as a subscription service. We've been doing this for 4 years, 4.5 years. And Tim and Mark and Deshaun actually trade the account, the real money, our accounts plus their own. And so we had a great day today. We've had a really good month. So
that's fantastic. Good. Awesome. Randy, how's it going on your side of things?
Great. Randy Bassett here. How you doing? Cover calls, momentum trading, advanced trading. Kind of do it all.
And baseball.
And baseball, which we got rained out last Sunday. So
after all that, you still did?
Later. Yeah.
That's so unfortunate, man. You're trying to play that game, but it's just not coming together. Oh,
yeah, it'll get started. We play like 25 games during the year, so that we'll get it going.
True. I was blown away when I realized how many baseball games there were in a season. Like, it's not like other sports. I mean, our hockey's that way as well, Mark?
Quite a few games, 84, 85 or something? How many games are baseball total?
162.
Oh, yeah, that's double, yeah. Wow, that's just a lot.
Yeah, so many games. That's awesome, though. Well, you'll get them next time. Awesome.
Randy, could you turn your mic up a little bit? You're a little soft today.
Let me see if it
sounds a little muffled or something, right? Hello?
Mm-hmm.
I don't know. Did that help any or?
No.
Yeah. Hey, Randy, I know what I have to. I know what to solve your problem. You have to do it right now. But if you go up to you use Apple, right?
No.
Okay. Well, on Apple, you just go to System Preferences, pop it up. You got all the stuff, and you just go down to it shows a little microphone speaker. Click on that, and there's a bar. My bar is always halfway down, so I have to push it all the way up.
Oh, I'll try that.
Okay.
Awesome. And our new guest this week, Mark. How's it going, Mark?
Yeah, it's going pretty good. I was on briefly last week, but I got some internet problems, so here I am. So first time live, yeah.
Yeah, exactly. Well, the camera, we heard a little bit from you, but yeah, the camera situation. But awesome. Would you like to introduce yourself to the people?
So, Mark, I've been around for quite a while with Joe, actually since 2005, 2006, when I first kind of started hanging out. The group over there, the cover calls and options and things that they teach. I have been teaching for many years. Been trading since around 1995, before the internet almost. Back then, I'd call your broker. It was $100 a trade each way in and out. That's kind of crazy back then, right? They get the paper out
Yeah.
for the options, eighth or quarter, call your broker, place an order. So things have come a long way since then. I traded professionally for about 4 or 5 years with some funds. So got, I guess, quite a good experience, both options, stocks, and futures also.
Michael, let me say one thing about Mark. He's been with us, like I said, 20 years, but he's been all over the world with us, all these places and some of the cruises like you've been on. And he's an absolute genius and just does fantastic on these trades. He's just joined. I guess this is about the second or third week live, and so he's just recovered from the virus, and so
It was a little rough.
we try to take advantage of it right now because he's weak,
And how long have you been on Micro Moment as a client?
So Micro Moment, I kind of followed a little bit off and on, but then it's just a new trading method, shorter duration really to me. It's not much good. So it's actually better. It's one of those things where you can trade in and out every day. You don't have to go to bed, wake up, and feel like you're going to be sick because the market's down, 200 points or something. So every night you go to bed, all your positions are closed out. It's a good thing. So, but now, probably been following this for about 6 months, probably.
Awesome. And now to the coach role. That's a very interesting thing. Is all of our coaches started as clients, just walking in the door from. We walked in various states and countries. Even some of us, met the people here for the first time, and we all ended up in the position we're at. It's pretty. I don't know. I like that dynamic of how we set things up. Deshaun, how are you?
Oh, wonderful. Awesome.
I will introduce the topic briefly since we're on Deshaun. We're talking about ETF versus stock today. So we're going to go a little bit over the pros and cons of those items and those vehicles, more like, and how to best use them. They're both quite useful for in different areas, and that's I guess I won't get into it early. That's what we're going to discuss. But how you doing, Deshaun? Can you introduce yourself to the people?
I'm lovely. Well, I'm Deshaun. I think I'm the newest trader out of everyone here as far as trading is concerned. Just what I do. I think I've been trading for about 2 years now, 2.5 years now, and I teach the micro moment trading technique every day, or Monday through Friday, 8:30 to about 9:30. I'll stay a little extra most days, but other than that, I just trade options, trade SPY, and that's all I do.
Absolutely. Simple. Awesome. How's it going?
Deshaun's really good. I mean, I've been only on here for a little while, trading MMT and watching Deshaun and listening to him. And him and Volt Tim, they really have a good grasp of what's going on. It's really, really amazing to see how well things have developed here, and the clients, I'm sure, really appreciate it. So,
absolutely.
Yeah, something special about Deshaun and the micro moment sessions in the morning. Tim and Mark will come back later after the first session if it warrants it. Deshaun, if it warrants it, will stay, extend that first section, answer people's questions, help them out. Because a lot of times the trading gets pretty active and people don't have time to ask the questions or we don't have time to answer them. So he really adds to the morning session there. So he gets tired real easy. But he came on gangbusters this morning, just all going and made 2 trades and got tired.
That's awesome. He's great at the regulation of just everything that is entailed in trading too. Deshaun and I really talk about mindset a lot, and I really appreciate that too. We were talking about that a little bit last week, and just all of the aspect to a balanced trader is always great conversation. So awesome.
I love this comment by Gary. And then I'll shut up, Mike. Gary said,
You're good.
He says look how pretty Deshaun looks in his furs.
I agree.
I know we're gonna have to up our game, guys. I mean,
That's kind of stylish, man. Yeah.
we all look pretty mundane compared to Deshaun there.
And he's the comfiest.
Yeah.
He just lose in general. That's awesome. Tim, how's your morning going, man? How are you?
Good. I'm Tim. I'm one of the desk traders and instructors for the micro moment technique. And I have been doing this 2.5 years and teaching for a little under 2 years, and love it, and just absolutely love it.
Absolutely. And we have recently traded glasses.
Yes.
I think. Yeah. We both got new frames within the last week or two.
Yeah.
Yeah. Yep.
Which I found out really helps trading.
Yeah, I know. My prescription changed about a half point in each eye, and it was an adjustment.
Also, now you can actually see the chart.
I can actually see the charts. Yeah.
Wow.
And the different lines, right?
Amazing how important that is.
Solid prerequisite. Fantastic. Alrighty, well, everyone, that is everyone. The viewers have met the presenters here. I'm Micah as well. I traded Micro Moment for a few years. I started on a Trade the Moment old technique seminar that we did, and Joe showed me the ropes a little bit, and Randy was there. Yeah, I just learned a lot, started soaking it up from a young age. And I mean, first time I saw an option chain light up, it was E-Trade's old pre-trade monster E-Trade, when all of the numbers would light up red and green, but each individual figure would freely. So it was just a Christmas tree. It looked amazing. And I was like, I want to do that. That looks cool. So here I am. But yeah, now I am MC, and we are heading into the topic. So Deshaun, would you like to give a synopsis of the topic and kind of what we're looking at today? How would you like to?
You saying as far as stocks, difference between stocks versus?
Yeah, just kind of an overview of ETF versus stock, and maybe defining both so we can go over them.
Okay. Sorry, I don't know if y'all know I do have to head out here in just a second. So
yeah, Joe mentioned that, right?
Yeah.
Okay. How many minutes do you have with us?
Like 2.
Oh, okay. So probably not that amount of time. Awesome.
Yeah. But just to get into it, just I mean, how I understand it. Not saying I'm right or wrong, but just how I understand it. The major difference stocks and between like a stock and an ETF is like how a person can use it. Stocks would be like a little more like defined, more aggressive way to invest your money versus the ETF, so you're buying one company versus buying multiple companies. That's pretty much the gist of how I understand it.
Yeah.
So it's either you want to be a little more aggressive, do a little more research with your techniques. You want to invest more in stocks. If you don't want to do that much research, you want to just kind of allocate your portfolio over a spread, you go with pretty much ETFs.
Yeah, absolutely. And before you go, what do you trade and what do you prefer?
I trade just SPY, so the ETF, and I only trade options. So I'm pretty much buying now, selling later. My portfolio is not strong. That's all I do right now. So that's just me. That's just kind of what I landed on, because Joe was the first person to teach me this technique, and I just was following my mentor. So
yeah, of course. And I think there's something to be said for trading day to day versus how you set up your portfolio in the long term. You might use stocks or ETFs differently there too.
Can I add one thing to that? Since he's going to be leaving very shortly, the key here, as far as our technique goes, particularly our micro moment, it makes no difference if it's an individual stock, hopefully you pick one like Apple or somebody that's going to stay in business a long time, or an ETF. The trading's the same. The nature of what you're trading doesn't modify what we do. The trade's the same. And again, when you go with the ETF, that totally solves the problem of stock selection. If you were out there under the old methods of just picking out a stock, and it was a crummy stock, and it was going to go out of business, that's not what we do. We try to pick out either an ETF, SPY, an index, or an individual stock like Tim does. Apple ain't going anywhere. It's good, and that's what we do. So.
Right. It's got to have some movement, right? Some type of volume too. It's just got to be a good stock, like Joe was saying with the Apple, especially.
Right. I was just going to jump into that. That really one of the prerequisites that maybe overrides that question is how thickly traded is it? And we want a stock or an ETF that is densely traded, so that we have both volatility and liquidity in our trades. So in that respect, it really doesn't matter. It's going to go into what Joe says. It doesn't really matter so much what it is, as long as it is thickly traded and it's a quality company that's not going to go out of business tomorrow. But the thing that I do love about ETFs, and I trade Apple, but I've traded Q and traded other ETFs, is that it gives you a good snapshot. We take advantage of the strength in the sector. Rather than just the strength in the company, we have the entire power of that sector behind us. So in that respect, those decisions are really taken out of our hands at that point. If we're doing Q, we're in the strongest of the NASDAQ. We automatically put that question aside in terms of picking the companies, and we let them choose the strongest of the companies that are in there, which takes some load off of our shoulders, which is great.
I'll say a couple things. Is my microphone a little bit louder? Because I found a thing to move the bar over. So.
No, it's good. Yeah.
Is it louder? Okay. Just a couple things. For those that are like brand new on the podcast, ETF stands for Exchange Traded Fund. And as Deshaun said, it represents a basket of companies. So like the SPY that Deshaun was talking about, that's the ETF for the S&P 500 index. So there's actually when I looked last, there was like 503 stocks in the S&P 500. But so it's spread over all of those stocks. So it's going to be less volatile than an individual company. And that's what Deshaun was talking about with aggressive versus a little more conservative. So you don't have to look at just one company that could be hit by some major news at any second that could drastically change it. The ETF is not going to move quite as drastically during that same time frame. And as Tim said, there's on the ETF, you usually get a lots more volume being traded. So that's the liquidity that if you're doing like SPY, there's going to be millions more shares traded on SPY than there is on an individual stock. So that also gives you easier egress and exit. Whatever. What do they say on the plane? You're boarding and then you're unboarding. Disembark. It's much easier to get in and out of the positions when there's millions and millions of shares traded during the day, because that's huge liquidity. So that ETF gives you both the diversification as well as that huge liquidity at the same time.
Well, ain't QQQ the largest or the most number of companies?
It might be. I don't actually really look at the overall volume every day. I just know there's a lot. But
so you have the SPY, which represents S&P 500, right? So
SPY is already 29 million so far today, and QQQ is 26 million. So they're
pretty close.
They're kind of close together, but that's already today. We're an hour and a half into the stock market. There's already 29 million shares traded. That's huge liquidity. You're not going to find a stock, but unless it's on Reddit or something, all of a sudden, you're not going to find that kind of volume on a stock.
Right. And Apple's right up there with them at 29
Yeah, it is.
million.
Yeah.
And actually, for the last 4 to 6 months, Apple actually has had better volume on the underlying than the other two ETFs we've been doing.
Yeah, it's pretty closely followed stock too. It's pretty widely held, I think, too.
Yeah.
Yeah.
Yes.
But it's also part of the QQQ or the NASDAQ, you know.
Mm-hmm.
To highlight liquidity for a second, though, that is massively important in Tim's everyday.
Yes.
Could you explain a little bit about that?
Absolutely. Yeah. Liquidity, as you said, it's hugely important for what we do. The reason is we trade very fast, very quickly. So we want our executions, our buy to open and our sell to close, to happen as fast as possible. So when we have, if you look at your options volume, you can get a sense of how much the options are responding to the underlying stock. And the more trading we have, the easier it is to get in and out. There's just more available trades to match to, whether you're buying or selling, because, you know, as our experienced folks know, in options trading, there has to be a buyer and a seller that agree on a price. All this happens in micro moments of time, since we're trading hundreds and thousands of options every second. That happens very quickly, but still, there has to be, when I'm buying a stock, there has to be a seller who's willing to sell at that price. And when I'm selling, there has to be a buyer who is available to buy it at that price. And we can get into price fluctuation in some future.
Yeah.
I think it's important to point out that most of these trades are like 15, 20 seconds, 30 seconds.
Yeah.
You're through. You're in and out. You're through. You're done. You only trade an hour a day, and you use the micro moment, and you're done for the day. You never extend it overnight or over a weekend or anything like that.
So to simplify that one example, basically, if the fill time directly affected somebody, there has to be multiple people waiting on the other side, because each person comes in with their bid ask as well. This is to the everyone, not necessarily. I know you guys know how this works, but each person comes in with their bid or ask, depending on what side of things they're on. They have a pre-established price, and we see. I know it can be a little bit confusing as well, because when we see stocks move, we just see it hit every cent multiple times as it, zooms up on its pattern. And I mean, there's hundreds of trades happening at, I don't even know how fast those things legitimately go off when you have that type of volume on something like Apple. I don't know how many individual trades happen a moment, but you have all of these people together, and that's the broker's job. So that's why we pay the broker. That is, the broker is to assign you buyer to you seller to you buyer, and make that exchange process happen, thus giving you the market. Like that is so, it's very simple, but it's very, very core for a lot of the concepts that we do discuss is liquidity.
Yes.
Understanding. I'm glad we mentioned that. Yeah. So also, you guys don't like Reddit stocks? No penny stocks here? What's our view of penny stocks?
We don't chase fantasies, so.
No fantasies, okay? Tim,
Yeah,
what do you think?
and I'm sorry to be laughing, because it's really not funny. A lot of people lost a lot of money in this craze.
Well, somebody made money, but somebody lost money, right? So there's two sides of that.
Yep.
So probably a few people made lots of money, but lots of people lost lots of money because they were unaware of really how the process works, and that lots of buyers, the price shoots up, but then all of a sudden you start getting sellers, and if you're not one of them, you get lost in the shuffle there, unfortunately.
Not to mention, if you can sell at all, because there's this magical thing called liquidity.
Mm-hmm.
And when something's tanking, there might be a period where, you can sell it, but if there's no buyer there, if there's nobody on the other side of that table for the broker to say, here you go, right? Liquidity.
I think the worst part of a lot of those really young, inexperienced traders, and a lot of them got enamored with margin, and they had huge positions with margin, and that is what completely wipes you out. You cannot recover from that when you get those dips, and so.
You hard to tell your wife, we had a second mortgage of the house, so you need to pay my margin account, right?
Yeah. Well, just talking about margin, Joe, even highly experienced trader like the Tiger guy this last week with his it's called Argos. Arch, right? Arch, EGOS. I split the name up into two, ARCH and then egos. So it was really like a big ego, but that guy had like 100-to-1 or even more margin out there. And that almost took a couple banks out last week.
Yeah.
To show you how
that are really hurting.
Show you how naive people can be. Like Mark had to go get a second mortgage on his home, and he went to Quicken Loan.
You sure it wasn't Countrywide Finance?
What's worse is trading futures than having something like that happen, and you got to go, somehow take delivery of 80,000 barrels of oil or something. What do you do?
There you go. Or a boxcar full of pork bellies.
Yeah, there you go. Yeah. Bacon for life.
All right. You only have to get burned once on a margin call hopefully you only have to get burned once on a margin call to get the lesson. Well,
and that's the neat thing about the micro moment. We have ultimate margin. I mean, probably almost 100%, probably 95, 98% on average. And that's not loan. So you never have a margin call. And if you go on margin, the most you get is 50%. And so it just makes no sense to, and Randy has techniques are pretty much the same way when he's using leaps to stand in for the stocks.
Yeah. But we need to say for sure, don't trade on margin.
Yeah.
We don't trade on margin. That's the fastest way to lose all the money that you have. Just don't trade on margin. And what Joe's talking about is the leverage of being able to use the options, where instead of having to have $100 a share for Apple, you're using $1 a share to trade on the micro moment trading. So that it doesn't take as much of your capital. You're really leveraging and you're not borrowing a penny. So it's really important to not trade on margin, use the money that you have. But by doing the micro moment trading where you're in and out really fast, and you're buying the option and selling the option with a high liquidity position, you're leveraging your capital where you don't have to use very much of it and still make fantastic returns.
Well, that's like this morning, Randy, on Apple. Tim did one trade where he bought this Apple for 94 cents versus 200, $300, whatever it is. And in the instance where it was $1.25. Incredible leverage.
Without using margin. So that's perfect, Dan.
Yep, no margin.
No margin.
Totally different setup, but very, very key. If anybody has any questions about that can be a little bit mixing. So feel free to drop in a comment in Facebook or LinkedIn, and we'll clarify. I mean, Facebook or YouTube, and we'll clarify what we mean on that. So, I mean, from the conversation so far, I feel like I should just never buy a stock again. Are ETFs just the way to go, or do stocks have anything going for them?
Well,
over ETFs.
Yeah. Well, personally, Apple's been very, very good to me. So
okay, we got a stock trader. Got it.
Really
we're all option traders, but
if you watch Apple and NASDAQ QQQ, where Apple goes, pretty much NASDAQ goes, QQQ goes with it, right?
Yeah.
It's a big part of what's happening there. So.
Yeah.
I want to clarify really quickly. Most of this conversation is oftentimes we don't even directly trade the ETF or the stock. So this is an option biased conversation. We're trading options on an ETF or options on a stock, and that will affect some of our opinions. Sorry, continue.
Now, Randy does have one technique that's fantastic when it comes to stocks. A lot of people love stocks, particularly the older investors love stocks with dividends. And Randy has a technique that you can leverage those dividends. You already paid a lot for the stock. You're getting your dividends on a monthly basis. And he can increase those dividends 2 or 3 times what they normally pay out. Instead of paying out 3% a year, 2% a year, or 1% a year, he can get 6% a year, 5% a year. Using options with that with that stock that you've already got in your account. You just sit there collecting the dividends. So you can increase those substantially without you getting rid of the stock. So,
Joe, now that you mentioned that, Joe, I'm actually teaching the dividend workshop on May 15th.
okay.
So that's coming up in about a month for those that want to learn how to increase the overall returns on your stock while you're getting your dividends and not to sell the stock.
Yeah, April 17th, you and I have the 2-day covered call leap seminar, and Randy drops in and out of that also. Tim drops in and out of that also. So.
Mm-hmm.
Absolutely.
Yeah, and these are. Please put these on your calendar, folks. I think these are almost mandatory. They go into the foundation of what we do, and we really go deeply into on why we make the decisions, why we do these strategies, what they're made of, why they are profitable. It's just a part of your education here, and I think you only pay once for our seminars. Is that correct, Joe?
Well, each one has a different price,
right?
And some of them you pay like those people that paid for the covered call leap seminar 20 years ago and still get it for free.
Yeah.
They over the years they've changed, and I don't have them in front of me, but
what we've done, Tim, is we brought all of the seminar prices down.
Okay.
And then we put a reattendance fee because people were doing a certain amount and then getting disproportionate value. So everything is cheaper, and then it's a certain amount to reattend all of it. Yeah.
Beautiful.
And of course, they can sign up right off the website, right, Micah?
Yep. Yeah. Micromomenttrading.com is how we can set up.
Yeah. But tremendous value.
And that's where you can register too, is go to micromomenttrading.com.
Yeah, absolutely. We should have a link right below the video.
Well, you've got that free seminar on Micro Moment Trading, 2 weeks free on Micro Moment Trading, I think.
Running a special event.
I believe that is still up. Yeah, that's on the main site though. There.
Yeah. Okay.
Awesome.
Yeah.
So bringing it back around, Tim, you trade a stock, and then to Mark, why you guys decided, or why you guys picked your ticker for Micro Moment Trading?
Sure. Mark, you wanna go first?
Yeah, Tim already had Apple, so I had to take QQQ. So.
Fair.
Well,
yeah. QQQ is similar. The other ETF or indexes, they're large, easily traded funds. I mean, and once you know the technique, you could trade almost anything, right? As long as you have the liquidity, there's volume there. These three seem to be the best that we feel from what we've seen out there, as far as easy to get in and out of, easy for people to trade. There's enough liquidity. But QQQ is very widely traded. It encompasses all the tech stocks. So it's a really great ETF to trade.
I think we need to point out one more thing too. We don't trade. We don't speculate. We don't get in a position with QQQ or Apple thinking, oh, look, the pre-market, look what the chart says, it's going to go up. It's going to go up. We don't do that. We don't care which way it's going. When we look in the morning, first thing we say, hey, the market's either up or red or green. It makes no difference to us. We're trading the volume. And we just want to see a lot of volume. And so it's probably the only technique I know on the face of the earth where you don't pre-select, a little speculation on, hey, which way is it going to go? So.
Yes.
Mm-hmm.
And it is easier, right? I mean, otherwise, the stuff from Randy teaches, it works, right? But you have to manage it. You can't just let it go. You're in and out of the market. It takes a little more work. At least with this, you go home at night, all your positions are closed out, sleep well, no problem.
Yeah. But getting back to Micah's question, why did I choose Apple? Well, it's very similar to Mark. At the time, I was trading Q and had been trading Q for a long time. And then our Q trader, who had been out for a while, came back. So he picked up Q again and had left Apple for me. So I picked up Apple. Apple was picked up. So when Mark came on, he got, or actually we
you drew straws.
We lost our Q trader and brought Mark in as our Q trader. So all this to say that actually it doesn't really matter so much.
Because you you've traded more than Apple with this technique, right?
Yeah, absolutely. But we like to stick with whatever ETF or stock that we're most familiar with. Because, and Micah used to love talking about this, about personalities, about they have a certain way they trade. And the longer you trade these, you kind of get to know its setups, its patterns, and get to feel comfortable. It gives you a little bit of an edge on them. So, currently I'm with Apple, and it's been good. It's been very good, in fact.
And that is for the reason of dynamic market too. When I was on there with Tim, we would find things on Q specifically that would happen every day for a week and a half, and then it would stop. But every day at 1:30, it would do this thing that we noticed, or and that was not just one situation.
It's sort of like getting to know it like a little kid. You have a little kid. Maybe your little kid's dysfunctional, but it's thing,
Yeah.
It's also through the patterns, right? There's patterns of people that are trading patterns. There's electronic fund systems, bots that are trading patterns. I mean, so they tend to go in spurts, right? That's why you see some of these patterns, I believe. But,
Yeah.
And I know it sounds a little bit silly that stocks have personality, but think about it. That stock is positioned in a specific place in the market. So they're constantly working with, not constantly, but for certain periods, they're working with consistent vendors. They're striking a new deal that will have an effect for a certain amount of time, right? So they have an MO, a way of operating, and Apple runs a lot differently than Microsoft at its core. So they're less apt to take hits on certain things and more vulnerable to other exposures, and it kind of happens in the same way over time.
I think the most incredible thing we had is fun, actually, on the website, and Micah ended this and put it on there, is our TikTok threads. not TikTok, they're trading all these Apple trades, but you're seeing it and you're hearing it and you're seeing it, and it's really, really cool. It's a little chart, and you hear Tim create the trade, and then you hear somebody else come back on that and ask, $2, whatever, just back and forth. It's really cool.
Yep. Yeah. I'm sending the banner or the name to Marcus so we can put that up. Micro moment trading. There we go.
Yeah, I love that that Micah has picked up TikTok and putting our trades out. It's the right format, short videos, and being able to see that. And what's really cool is seeing other people outside of our company who have their own techniques who are doing it. And inevitably, we do better in our trades. But it's kind of fun to see that side by side. But it's a great way at the end of the day to, or whenever, to review these trades with all the elements happening in real time. So
it's cool. It's cool also because Deshaun does his own music and he sings.
And then speaking of TikTok, the last video was actually simultaneous. It's funny we're talking about this. Simultaneous trades with Tim and Mark.
Yeah.
You guys are on a QQQ and an Apple, and you're in this trade at the same time on the same push. Could you talk about if you'd like to, why we keep them side by side and stocks with
Yeah, well, those kind of trades just happen, right? Like I said, Apple is a part of the QQQ index, so to speak, right? So momentum is going the same, and sometimes where Apple's going, QQQ's going, or where QQQ's going, the Apple's going, right? So a lot of times the same momentum points, we'll be entering some of the same trades. It's very common, I think.
Do they have a direct effect on each other, or do they kind of just happen to do the same thing? In your opinion?
Not always, but it seems to be interrelated somewhat, right? Because they're part of that same index, right? At least Apple is, right?
Mm-hmm.
Yeah, I do think they influence each other. We have plenty of anecdotal evidence to see when one is moving, another moves, and the charts more often than not are very close to each other. When we see a move on Q, we tend to see a move on Apple, and vice versa. It's rare that we see them move in opposite directions.
Yeah. And I mean, are there instances that you would that people should watch out for? Are there any big breakaways?
Yeah. I mean, I keep an eye when I'm trading. I don't mean to keep stepping in here, but if Q makes a move, a breakout up or down, I'm immediately looking at Apple to see if it's going to follow suit. And it might give us just a few seconds of looking into the future for Apple. So it does. And another thing is if you're in a trade and suddenly I'm in an Apple trade, I'm in a put trade, I'm expecting to go down. Suddenly Apple pops up into call. That's a real big red flag for me. It's saying this momentum is about to change. This movement's about to change.
So at first it was QQQ affecting it and then Apple affecting it like the other. Is there one that's always in front like a pairs trading situation or not quite?
I would say, and I haven't a whole lot of movement in this, but Apple seems to lead Q a bit.
Yeah, so because Apple is about 12% of the overall index, right?
Yeah.
Where like Microsoft is 9%, and so you go down to Nvidia or Adobe, they're like 2%. So Apple's pretty heavily weighted in the index, so it does influence it.
Yeah.
Absolutely. Yeah, so it would be natural if we see folks buying up the stock, Apple the stock, to expect to see that affect QQQ, the ETF.
Yeah. Absolutely. Joe, what were the ETFs structured like? If before we go here, I think there's a lot of inherent confusion about ETFs. Could you and Mark, you were talking to Randy, I guess, and I guess you guys have all traded. When options, I feel like options have had a huge effect on ETF one. They pretty much, I mean, they changed how everything worked, but options on ETFs have changed the structure of ETFs themselves. How did that used to look, and what any sort of information on the start of ETFs and bringing those into relevance?
Well, they still keep coming up. They'll group up a bunch of companies, same industries, like QQQs or more like tech stock, NASDAQ type stuff, and then I guess are there any ETFs, Tim, that have Apple in them?
Well, Q.
Yeah.
Just Q.
There may be some other specific ones that have it too, but they're more
exactly
focused, right?
So. Yeah. Mm-hmm. And new ones come up, Micah, on regular, but every 3 or 4 months, seems like a new one comes up.
I believe they launched one for psychedelics last month.
Did they?
Yeah.
Yeah, psychedelic. Yeah.
I didn't know that.
No, usually ETFs are focused, right? They're focused on industry or a sector in some type, right? They can be very focused, or they can be more broad, like the indexes seem to be.
Yeah.
The options allow us to trade them with leverage without, like we talked about before, without margin. Well, before that, you would trade just a basket of stocks. You'd say, okay, let's get the industrials. Grab 10 or 12, might trade those together, but it required more money, right?
Yeah. Now we're not actually trading the ETF when Tim is doing Apple. He's trading. Each side of the equation is an Apple option, right. But we just say it's grouped with ETF, so it's going to have that stock's going to have characteristics. In other words, it's not going to probably go out of business, but it's not technically the ETF. So
it's massive. It's like $1 trillion company, right? So
yeah, exactly.
Yeah. It's going to take a while to spend all that money.
Yeah, and so
grants a lot of stability. And one key thing I would like to. That I like it with is, so if I'm trading Spire Q and Apple drops out from under it, it does affect it.
Yeah.
Right. But that's one nice thing about them is you get this kind of instantaneous diversification. Mm-hmm. No matter if you're in the trade for 3 minutes, Tim is a little bit diversified, or Mark is a little bit diversified when he's in Q for 2 minutes. Has a nice effect.
Yeah. Let me correct something I said a while ago. When I said like Tim trading Apple, trim, Tim is trading Apple. It's not an ETF. It's not the group. Up here, Mark is trading QQQ. Apple's in that. He's trading the ETF. Right?
Yeah.
Yeah. Where Mark is just trading Apple, which is in an ETF. He's not trading the ETF. He's just trading Apple.
Yeah.
Like I say, Mike, you get this diversification. So if one stock does get a little wonky or something happens or some news, some event that happens, it doesn't tank the whole QQQ, right?
Yeah.
All right.
Absolutely. Man, a lot of different aspects to ETFs and stocks. I thought this was going to be one of our most simple ones, and then we talk about a bunch of other things, but we've pretty much stayed on topic. There's a lot to chat about.
And
Yeah. So one final point with MMT, with the technique, micro moment trading, right? It doesn't matter because we're trading the options. We don't care what direction it's going. We're going to follow the trend. Get in, get out.
That's right.
That is a main highlight. I will say before we wind this down is imagine a trading world where you walk in and you know what you're trading that day, and you just sit down and you trade that thing, and that's it. Like how much of trading and the stress of it and all this, consideration and over analysis is because you have to go through 120 tickers that day, like, and they're all penny stocks, and you have to see if they're even viable or if they've been sued 2 years ago. Like, are there some come ups in penny stocks? Sure.
Yeah. Deny it. Yeah, Mike, we covered this last Thursday. The great advantage of the micro moment is that you're not having to have expert abilities to evaluate stocks. You're not evaluating anything. And that was one of the downfalls. One of the people have problems with when downfalls being an investor is some people have everybody has a different ability to evaluate. And so they're speculators. They're trying to evaluate. They don't really have that good of knowledge to work up if they're evaluating right, And so they make a lot of mistakes where with the trading boat, we're trading these known entities, and we're not concerned with evaluating. And again, we're not trying to guess. Is this thing going to go up today? I'm going to make a bet here. It's a bet, speculation bet. Hope the stock goes up, and then you're really crazy if you do it on margin. And we don't care. So you eliminate that. So you eliminate that spectrum of the market. Stocks go up and down. We won't go up and down.
Yeah, and that's a good point, Joe. Is the technique takes out so many of the variables in decision making. You can literally sit down 2 minutes before the market opens and have all the information right in front of you.
Well, yeah, and we've always equated it to a pole dancer, and today Deshaun was the closest thing we had to a pole dancer. That outfit he had on.
I thought it looked.
Hey, don't pick on the guy that's not here.
I'll stick up for him because I have a coat like that in each color. I have a great
Oh, there you go. That's from your cruising days, probably there. Hey, one thing I want to throw in: everything that we're talking about can only be made possible because of the intraday streaming chart that's proprietary to micro moment trading. Without that chart, you are just shooting in the dark and speculating. But the chart provides the opportunity to see where the direction is going, where the momentum is going, when it's changing. And that's what allows the great returns and the quick in and out at the right direction. If you don't have the intraday streaming chart, you're not going to be able to do all this process.
Hey, Chuck has a good comment. Flash up in there.
Awesome. He says, I couldn't agree more. For more than 9 months, I've traded only the QQQs, and it has its own personality traits. Learning them gives me an edge, keeps it simple, and surprises are easy to deal with. Very, very, very good point. George says, oh, wow, he's got a pretty cool picture.
Apple is, like I said, 12% of the QQQ, right? So it does have a large holding, so it does tend to move sometimes. Someone's with it, right, depending on what's going on.
Over 12% today, he says, yeah.
Good.
Yep, absolutely. Yeah, so it's not so much of a paired effect, but it is a bit of a drag effect. One, they both affect each other based on what goes first and what goes first vehemently. Yeah.
Say that 5 times.
Yeah. That's awesome.
Okay.
Well, I want to thank you guys for being here. Next week, I've I've not been given the next topic. So next week we are talking with Randy about charting indicators. I think we're gonna have plenty to talk about because how many indicators are out there now?
More than you can count on your hands and toes.
Yeah. I mean, last I looked, there's like 175, but there's probably a whole lot more than that now. People just keep coming up with indicators.
Yeah. So a few hundred. Indicator is defined as an item on a chart, so to speak. So if you have, technically your tick is an indicator. That's the real time price because you can show that real time price as a line, a candlestick, and even just to get the price on the board, there's some options you have with indicators.
Options.
Yeah, exactly. We dodge a lot of that and dodge a lot of the complexity as we do with the ETF stock combo. So some of the same conversation, but yeah, charting indicators and why we use the ones we do, different ones that are good that we maybe don't use. We'll discuss some that we're pretty inexperienced with as well. I'm curious about asking your opinion on Fibonacci sequence and different things like that, guys. If you're so willing to talk about that. So
All starts with math.
all starts with math, unfortunately.
Yeah.
Unfortunately, I was playing a game and I rolled some dice the other day, and I hang out with you guys and chat with you, and it was like I had to add like 3 and 4 and 2 or something, 3 and 4 and 5,
Yeah.
and I got it wrong.
You're in the right place, Micah.
Missed it by like
Set your shoes on.
exactly. So I'll work on my math while you guys get ready for next week's chat.
Okay.
One last thing I do want to mention is again TikTok micro moment trading. You can find us on there. A lot of our trades fit within 1 minute, so you can go on there and see a completed trade to clarify what we're talking about. But thank you everyone for being here. Thanks, Joe, Randy, Mark.
Thanks for letting me. Appreciate it. Thanks, Micah.
Thanks on the other side. Awesome.
Thanks, Micah.
See you guys next week.
Bye, guys.